Okay, so I'm gonna try and keep this video short and concise. I'm doing a video instead of a live. I'll do a live later. Um, so that way people could ask questions and stuff like that. But I want everybody to get a chance to see this. So um, this is basically just an introduction to how to use the Feigenbaum projections. Well, specifically one framework. There might be more in the future. I'm still working on it. But as of right now, I'm pretty sure this is the framework. And you'll understand why in a second. So, I call this a framework for projecting exponentially expanding fractals. Right? That's what I've coined it. Now, that sounds complex, but why did I name it that? There's a very specific reason. I didn't see this until I defined it as that. Until I defined it as something that is exponentially expanding fractally, right? That's when I understood what it was that I was looking at and how to then deal with it, right? So let's break that down. What does it mean for something to exponentially expand, right? It means for something to grow in size at an exponential rate, right? Multiplied by itself, or an exponent of such, right? Um, it is growing in size from some finite point or something that is exponentially smaller than itself, right? So think about what that means. Think of it kind of like the Big Bang, right? When you're thinking of the Big Bang, they say that some super small, tiny, finite particle, right, of energy just burst, collapsed in itself, and it suddenly started expanding into what we now call the universe, right? It's basically, think of it like energy building up into the smallest, most finite point possible, and once the energy is too high to where it cannot be contained any longer, it bursts, explodes, and expands, right? It's something that is expanding, right? So now let's think about, what does ICT talk about? He explains that every expansion begins from a consolidation, right? So think of a consolidation as some building up of energy, right? You could also think of it as a contraction, right? It is contracting itself, right? It's a contracting range. It is getting smaller, right? And it is building up energy. Now, of course, the markets don't have energy, right? But what they do have is liquidity, right? Liquidity is the fuel for price to move from one place to the other, right? It requires liquidity or orders being placed by participants, right? So if we understand that liquidity is the fuel for orders, and we define the market as something that is exponentially expanding and contracting, right? It is continuously shifting between those two states, where it goes from expansion to contraction to expansion to contraction, and this is happening fractally, right? So then you have to say, okay, can we find where it begins expanding? So the first idea that might come to mind, and you probably learned this before you even learned ICT, broadening formations, right? Broadening formations. So, I mean, this isn't the best example of a broadening formation, right? But, I mean, what do we have here? Right? It's going down. and then it's broadening up, right? You have a broadening, aka a megaphone pattern, right? That is what people normally think about when they think of something that's like broadening, right? Or expanding. Now, what is at the beginning of every trajectory, right? Or every like MMXM, right? It's a power of 3, right? What is power of 3? Well, if it's bearish, right, you're dealing with a consolidation. You deal with a manipulation. And then you deal with the distribution lower, right? That would be a power of 3, right? So, at the beginning of every trajectory is some type of power of 3 formation, right? But what we really can break it down to is, where does it all begin, right? Where does it all, if we're looking at this formation right here, you have to ask yourself, where does it begin, right? And where I would say it begins is the very first Judas swing, right? A Judas swing, it takes the high, it takes the low, and then it goes directional, right? It chooses a side, right? It gets super unstable for a second, lots of voltage kicks in, right? And then it chooses a side. It goes a direction. Sometimes, sometimes there will be times where it can't, right? You might see it do just this, right? It seems to not be able to choose a direction, right? That could happen sometimes, but most of the time, expansions are directional, right? And these are the broadening formations that people can see with the naked eye, right? But most of what I'm talking about, you actually can't really see from the naked eye, right? When people think of, when I say exponential expansion, they're thinking of a broadening formation. That's a good example of exponential expansion, right? But that's not fully what I mean, right? Exponential expansion could be something like this, right? Price is going, it's consolidating, bam, bam, it expands, right? That right there is an expansion, right? It expanded up, then it expanded down, right? It broadened for a second, right? And then it could just go down like this, right? Now, does that look like any broadening formation? No, that looks like power of 3 or even MMXM, right? Because power of 3 is at the beginning of MMXM, right? So what's at the beginning of power of 3? It is the consolidation and bam and bam. It is the consolidation and the Judas swing, right? That marks the beginning of exponential expansion, right? Period. You don't define it as a broadening formation, because you're not going to, if you define it as a broadening formation, you're never going to see it, right? You're only going to see it when a literal megaphone pattern occurs, and that's not what you're looking for, because every single trajectory begins with this, right? It begins with a consolidation and a Judas, right? It exponentially expands from a consolidating point, right? And at that point, it will expand further and further until all liquidity is absent. And what will happen? This will occur once more. This occurs at the beginning and at the end of every single trajectory, period, right? If it's not occurring on your time frame, it's occurring on a different one, right? So understand this one core concept of when I talk about exponential expansion, right? Define the markets as doing that. It is exponentially expanding from some finite point, contracting from, it goes from contraction to expansion, right? Contraction right here, expansion right here, right? Contraction to expansion. Just think of it like that. That's all you need to think about. All right, so now let's go to examples. When we look at this right here, this broadening formation, where is the very beginning of it? I'll remove these lines because they're not necessary. But the very beginning of the broadening formation is going to be where the very first Judas swing occurred, right? Now, if I were to zoom in, you might find more Judas swings, right? So I'm looking at just where's the very first one that I could see on this time frame, right? Just this one right here. Well, the first one that I could see is right here. And right here. Very tight. Very tight range. So what I'm going to do is I'm going to grab this and have an initial condition thing right here. It's this little box right here. Right? This would be what we could call the initial consolidation. Right. Matter of fact, the low is down here, and you have two candles whose bodies close within them, right? If you wanted to, you could even classify this down here as the entire initial condition, right? So that marks our first Judas swing, right? Which means that right here is where exponential expansion begins, right? So what are we going to do? We're going to pull up our Feigenbaum projections, right? So right now, I'll go to my thing. This is what I have my settings as, right? Screenshot it, do what you want, do what you need to get them down, right? Save them as a template, right? This is the Feigenbaum, I just have them right there, Feigenbaum projections, right? Now, the positive values on the left are not the same as the positive or as the negative values on the right. I want to make that very clear because I see so many people that will send me examples and they don't have their fibs correct, right? So both sides are not equal, right? And this is because positive values are relative. They're relative to 1, right? And negative values are relative to 0. Now, because of that, if you have them the same value, one side is going to be larger than the other, right? So you have to decrease one side, right, which I chose as the negative side, by 1 point to make them both the same absolute value, right? So to give you an idea of this, here's a box right here. Oh, shoot. Here's a box right here. And what I'm going to do is I'm going to highlight the range of that box. And as you can see, both sides are equal, right? They're exactly equal, right? That's exactly what you need. If you have negative values the same as positive values, you're not going to get that, right? That means that this negative value is going to be all the way down here, and that's going to be, they're going to be off. They're going to be off balance, right? So I just want to make that very clear. So now I'm going to take my Feigenbaum projections, and because we did that, it makes it non-directional, so it doesn't matter how you measure it, but we're going to measure the bodies, right? Because wicks can come in all sizes, all shapes, right? So we don't care about the wicks, we care about the bodies. Those are what matters. Now we can bring that out, right? Just like so. So I want to make clear, when do we make this measurement? You know that this measurement is correct only when you make it right here. Only when you make it right here is when you can know this measurement is correct. If you are making this measurement right here, you do not know if this is going to be correct. You could guess it, you could try and anticipate it, right? Which is what I've been trying to get a grasp on. I do think that can actually be used well if you kind of start knowing when these consolidations will occur, right? But if you try anticipating it, you are dealing with probabilities. We do not want to deal with probabilities. We want to be dealing with certainties, right? This is chaos theory. This is how this works, right? You deal with certainties up to a certain amount of time, right? So I do not want to measure right here. Instead, come on, hurry up. Right here. Right here is when I would be like, okay, let's make a measurement, right? Now, how do you know your measurement is correct? Because if your measurement is correct, it should have projected both sides of the Judas swing perfectly, right? It should have projected it perfectly. If it didn't, then you know you made an error somewhere, right? But it all comes down to that initial condition, aka the initial consolidation before the first Judas swing. So you can confirm that this is a correct measurement if both sides of the Judas swing align with that first projected range. So now, if I am bullish, right, and I'm expecting higher prices, I will turn on that side. And also, I need to make this very clear. Each line itself is not a target. I am not targeting the lines. What I am targeting is the range. Okay? The range. I am targeting the ranges, right? Between 0.7 or 0.67 or 1.67 and 2.5029, right? Those numbers between the 3.5699 and 4.6692, those are the Feigenbaum constants and Malthusian parameter, right? Each of these highlighted boxes right here are targets, right? I'm not projecting, or I'm not targeting each line, I'm targeting each range. Now, what's important to understand here is what you are doing is you are almost like creating your own PD arrays. You are putting them into existence with this measurement. These boxes act exactly as that. They act like PD arrays, right? Whenever price will get to them, they will bounce off of them. They'll bounce around them, right? You could use them on lower time frames for entries, right? You could target from one zone to the next, right? You go from one zone to the next, right? So you use them like you use PD arrays, but these PD arrays are not actually on price. You are putting them into existence with this measurement, right? So I want to make that very clear. And also, I also want to make clear, see our initial condition? This itself can act as a PD array as well, right? Price could easily, right now, bounce off this and then go lower, right, to our next one lower, right, if we were bearish, right, if this was a bearish play, right, this could easily be a rejection point that we could be expecting, right? So our initial condition, our initial consolidation itself can act as its own range as well, which if you want to shit, come on. God damn it. Hold on. I'm going to need a... There you go. If you go to the fibs, you could just select 0 and 1, right? And you'll have those. You'll have those, right? It would be the range between 0 and 1, right? And that itself would be like its own PD array. But I personally like having it off just because it's too many lines, and I could see perfectly clear whenever I only highlight the consolidation over here. Whenever I just keep it like that, I could see perfectly clear, right? I know what's happening. I don't need those other extra lines, right? I like it just like this. So, our next target from right here would be this area, right? Now, since we're bullish, we could be really expecting up here, but our main target is just the next one in front, right? So we'll let price go. And there we go. And it's going to continue. So, I mean, I'm not going to... Oh, wait, shoot. It's taking forever for some reason, so I'm just going to go back to this. So, as you can see, it pushed all the way up to 3.669 before coming back. Remember, like I said, you could treat these as PD arrays that you have put into existence, right? It bounced off there, went to where? It went to right there, right? Now, where else did it go? That wick, bam. See how it touched the bottom of that perfectly? Like I said, this range itself could be a PD array, right? But the bodies, it stayed within there, right? So going even higher. So now, let's add some more. Let's add these right here. We're going to multiply them by 2. Right? We're going to multiply them by 2. Doing so, we get those. We'll do, and these ones multiply by 3. So, here's our next range. And now, I think it's time that I explain the butterfly effect. Right? This is very important. This is very important you understand this. So the butterfly effect, right? I've explained this on my Twitter. I recommend going on YouTube. There's a bunch of videos about it. But the butterfly effect basically means that, like, it's the idea that, like, the flap of a butterfly's wings in Tokyo could cause a tornado in Texas, right? It's basically like changing one thing slightly could have drastic effects in the future, right? So things change over time, basically. It is the main point of the butterfly effect. Due to these changes, right? Due to so many different factors all colliding, these changes could be very, very crazy over time, right? So you might be thinking like, why not use this why not use this range and put on 100 different ranges into the future? Well, it's because of the butterfly effect, right? So the first couple of trajectories, right? This one and this one, right? Or this one and this one, right? The first two that project the first Judah swing will be almost entirely accurate, right? That will be almost perfectly, purely accurate, right? It should, if you're doing it correctly. Now, anything beyond those two, accuracy will slowly fall over time. And what do I mean by that? Price will still target them, right? However, you're going to notice price might deviate from them over time, right? And this right here is a perfect example of that. You're probably wondering like, oh, well, that didn't fall perfectly into that range. No, this is literally our fourth target. We're expecting price to deviate from our targets right now, right? So whenever we have a projection that goes far into the future and we start hitting those targets into the future, we should expect, okay, maybe price isn't going to hit this target purely accurately, right? If price is all the way up here filling the candle, right, we can't just be hitting the sell button because we're hitting the range, right? If we're so far into the future with our targets and our projection, that price might start to deviate from it a little bit, right? Like I said, it will still target it. You'll still see it go to the general area, but over time, it will deviate more and more. So this one, it happened to be completely accurate, right? But usually, normally, so like you see this one, it went it went just a little bit over. Usually you might see this one now go that high over, right? Before before changing and doing something else, right? So over time, the farther out you project, the more price will deviate from those targets, right? It will still use them as targets, but it will just deviate from them over time due to the butterfly effect. So the butterfly effect is inherent in these projections, right? That's what I want to make very clear. That is expected behavior, right? It is not that, oh, this doesn't work. No, that was expected from the very beginning. It is to take advantage of the butterfly effect, right? Which is sensitive dependence on initial conditions, right? Which means that you could project or you could predict something very accurately in the near term. But the farther out you try and predict it, you will be less and less accurate, right? That is the butterfly effect, literally. So that was expected from the beginning. And yeah, I just need to make that clear. Now, right here you can see, price came back. Again, use this area as a PD array that we put into existence, right? It was our PD array. Now that that has been said, let's discuss when the next trajectory forms. And a new trajectory forms anytime a Judah swing occurs. Period. Period. That's it. Right here I showed you a Judah swing. Right here there's a Judah swing. Judas. Judas. Right there. What I'm going to do, I'm going to highlight that box in gold. That's our initial condition. So what I'm going to do, I'm going to apply the Feigenbaum projections to it. 1.67 hits it perfectly, right? Goes all the way up to 2.5. Hold on, let me turn on the 0.67, 1.5. The bodies Where did it stay? It stayed within the 1.5. The wick tried going to the 2.5. It couldn't really reach there. Right? Hold on, let me zoom in so that way I'm more accurate with this. There you go. Okay. So it barely hit that line, right? Remember where our targets are. This is a target. That range, right? This range is a target, right? This range is a target. How many targets ahead are we? 1, 2, 3, 4. What happened there? What do we get? We got deviation. Because we are 4 targets ahead. Remember, the first 2 are completely accurate. The third, it will deviate a bit, right? The fourth, you're going to see deviation, right? The fifth, if it was completely accurate, this would have filled that completely, right? But instead it deviated a bit, right? Because we need to make a new projection, right? Projections will occur fractally, right? When does the next projection occur? When the next Judas swing occurs, right? Because a Judas swing signals exponential expansion. Where is a Judas swing? I'll tell you right now, I see a Judas swing right here. Because I can't really mark it, but because it's very small, you would see this better on a lower time frame, right? But it went up, then it went down, right? So, matter of fact, let's go down lower. Let's grab our initial condition. Our initial condition's right there. Alright. Got it? Got it. Let's move that over just to make it look pretty. Alright. Judas. Right there. What are we going to do? We're going to measure. Wait, I think it's. I want to do down if I want to do. No, shoot. Oh, yeah. Because I'm bearish, so I want to go negative. That's just personal preference. You don't have to do this. This is just my OCD kicking in. But measuring the bodies. We hit one target right there. What do we do when we got to this one? We bounced. Where do we go? To this one. You see that? You see that? Where are we going next? Down here. Now, what happened when you got down here? What happened when you got down here? Well, for one, we're on the weekly. So what happened was, using our normal, SMC analysis, what happened was we hit this dealing range down here, right? We hit this order block right here, right? And we rated this liquidity right here, right? And matter of fact, we also down here, there was another liquidity level that was kind of just waiting for us down here. So I'll highlight that too for shits and giggles. Now let's go back. So, I ask again, what happened? Oh, isn't that crazy? Look how our higher time frame POI aligned perfectly with our 2.5699 to 3.6692 projection. How do we confirm that our projection is accurate? 1, we use the Judas swing, the initial Judas swing. 2, we align it with higher time frame POIs. If it aligns with our higher time frame perspective, then fuck, that's confirmation, right? That's confirmation right there. So what happened when we got down here to this area? Well, for one, we hit the equilibrium, we hit the order block, we took liquidity, 3 different things. So what do you think is going to happen? Well, I think a new trajectory should form, right? What forms a new trajectory? A Judas swing. Where's the Judas swing? Bam. Bam. That's the first one. So what are we going to do? We're going to grab our initial condition, the bodies, because wicks can be in all shapes and sizes. So we're only focused on the bodies right there, right? Feigenbaum projection. Bam. Now, isn't that beautiful? So, oh wait, hold on. Let me do this. Sorry, personal preference. Bam. We put those PD arrays into existence, right? We line them up with the initial Judas. We only measure that range after the Judas. And then we use that Judas to confirm that we have the range correct, right? It's a step-by-step process. It's very mechanical, very specific. It does not change. It is fractal. You could do this on every single time frame, including the yearly. This is how trajectories form. Price is constantly expanding, contracting. It is a fractal, aka an exponentially expanding fractal, right? Does this look like a broadening formation to you, right? No, it does not, right? That don't look like a normal broadening formation when you think of something that is exponentially expanding, right? So don't think of it like a broadening formation. Instead, think of it as I have defined it. It is exponential expansion. That's all it is, right? It is something that starts from a finite point and exponentially expands. It could be both sides. It could be directional, right? In which case, you will always see that there's a it begins with a two-side expansion, right? It begins with the Judas, right? It expands to the bottom, expands to the top, right? It begins with a Judas, but it picks a direction, right? A direction will be picked. All right. So it goes to there. It just went right through our 2.5029 target, right? Well, we already hit that before, so really it doesn't need to respect that anymore. Instead, it now needs to go toward 3.5699 and 4.6692 targets, right? So again, you could align them with higher time frame PD arrays. You could align them with liquidity, right? Where's the liquidity? The liquidity is right here, and we took it now, right? So what could we do? One, we can't do anything on this time frame until we see a Judas swing, right? If we don't get the Judas swing, then I'm going to continue using these targets. These are all the targets I have, right? This is where the last trajectory was formed, right? At the last Judas swing. So this is all that I have, right? So I cannot do anything on this time frame when I reach my targets. Instead, I'm going to go to a lower time frame now, right? And what do you see on a lower time frame happening? So now we're getting into the territory of projecting. I see a raid right there, I see a consolidation that came before it. Now I'm going to say, okay, we're in our higher time frame target. What if this is a trajectory that's now forming on the daily for a lower time frame entry? So I'm going to highlight this box, and there's probability attached to this because I have not seen the Judas swing, right? So I am now dealing with probabilities. I'm not dealing with certainties anymore. I'm dealing with probabilities now. But probability-wise, what I can see is it damn near respects the first one. So, if I'm going to get a change of direction, my target is down here. My daily target is down here, which is below this liquidity right here. So what am I going to do now, right? Because I can't do it on the weekly because nothing's happening on the weekly, so I'm stuck with the daily. So if that's my daily target, I'm going to go down to the hourly, and I am now going to sell the bullish pullbacks, right? I'm going to use ICT concepts, right? This is a MMXM, right? This is PO3, right? In MMXM. And I'm going to basically continue my bias all the way down here into this target, which could take X amount of time, right? So you build trajectories as they form. If a trajectory has not formed yet, then you go lower, right? That's what you do. You go lower until a higher trajectory is formed, right? This is the top-down analysis process. So this isn't a trading strategy in of itself. It is a tool that you use in line with your usual trading strategy of ICT concepts, right? SMC concepts. You do not have to change anything, right? Your entire trading strategy stays the same. Higher time frame bias, middle time frame structure, lower time frame entry. Everything stays the same, right? You could still use equilibrium. You could still use order blocks for value gaps, the whole 9 yards, all the goodies, right? You have to change nothing. What this is this is basically, think of it like an upgraded or advanced standard deviations, right? You use standard deviations when you're ready to enter to create targets, right? So you have to do all your analysis beforehand. You're just using it when you're ready to enter, right? Or when you're ready to create a target, right? The only difference is you're measuring something completely different, right? But it's not super different. I've defined it very specifically, right? You don't have to rack your brain too hard about it, right? It's very specific, right? And this happens fractally on every single time frame. Every single trajectory begins with exponential expansion. I promise you, backtest it. Try and prove me wrong. Do not just listen to me, right, and just immediately start trading with this. No. Go in, spend a week, 2 weeks, a month if you want, right? Try and prove me wrong. I guarantee you will find that every single expansion begins with the Judas swing. And there is a consolidation that comes before that Judas swing. And the consolidation plus the Judas swing equals power of 3, right? Power of 3 plus redistribution 1 and 2 equals MMXM, right? What is the beginning of an MMXM? Initial consolidation. For fuck's sake. It is a fractal circle. It's an infinite cycle of looping, fractal, exponential expansions. That's all it is. Right? And it is doing so at the ratio of the Feigenbaum constant because this is a complex relationship between participants, liquidity, orders, liquidity providers, and the market. And chaos theory does not have to be coded by anybody. I do not go into something and code chaos theory to be there. No. Chaos theory is a universal concept in nature, and it naturally emerges from complexity, right? It's like It's exactly like the Fibonacci spiral, the golden ratio, right? The golden ratio emerges everywhere in nature because it is something that is fundamental and universal to our reality, right? It is not something that you have to code or manually input to be able to see or experience. It is something that will naturally emerge by itself from something that is complex enough to allow it to do so. Okay. So with that being said, this concludes this video. Actually, I'm going to go over one more thing. Now, when we have something like our Judah swing, our initial Judah swing, oops. I feel like an old man right now, just taking my time. Sorry, guys. But when we have our initial Judah swing, this swing is important. It's very important. Remember, we only measure when this occurs, right? We only measure when this occurs. This is the only time we make the measurement, right? And we confirm it with this. So if this is when we make the measurement, here, let's let it go. There you go. Let's let go one more candle. If this is the only time we make the measurement, this is all that we have live when we're looking at this, right? But we know that a trajectory just formed, right? So something's about to happen. Go over here to something called the trend-based fib time, right? Not the fib time zone, the trend-based fib time. And what it does is you do 1, 2, 3, right? It's a 3-point time fib, right? Now, apply the same exact settings that I have over here. Although you're not really going to use the 1.67 and the 2.50. I just have that on for experimentation purposes, but I haven't found a use for those two numbers with this yet. So just have these on. Alright, now what are you going to do? You are going to outline the first Judah swing. Bam. What did it do? It projected the high and it projected the low. What do you think it's going to do here? I mean, it did two things here. And this is a issue with the fib time theme because the ranges are getting bigger or wider and wider over time. So it both projected a high and a low within the same range, right? But you know something is going to occur in these ranges whenever you get them. I have found the most use with them just having the first two on. And the reason why is exactly like I just explained. It doesn't help you knowing that something is going to occur in this amount of time. You know, like at that point it's just like ridiculous. You know, it's like, okay, at that point I might as well just make a guess. You know, so to show specific and accuracy, I just like using the first two. But really, it's quite interesting because you could continue to do this. So I'm going to have it right there. And I wonder what's going to happen here. Well, what happened here was it rated our buy-side liquidity. That's what happened there. Right? So you could actually use every single expansion leg. Look at that. They shared the same target. Right? But every single leg, basically, multiply it by the Feigenbaum constant with the trend-based fib, and you will get some type of target. Right? So you want to be making these as you go. Right? Measure each leg as you go. I'm still trying to get a grip on this because I discovered this literally 2 days ago. But I just wanted to show you that there is a time thing for this too. This is universal both across time and price. Just to be like a little cherry on top thing if you guys didn't believe it yet. But please backtest this, please. I've been screaming about this from the top of a mountain for months. And if I'm being honest, I only have 4 or 5 people that are willing, like, actually putting in effort backtesting this for me. Everything that I've done, I've discovered myself thus far. I've had very little help from anybody. So please backtest this because I am exhausted. And I really need help. But hopefully what I've shown you is enough for you to apply it, backtest it yourself, see what I'm saying is true, and then tell me how you use it. How do you find use in these? How can you improve it, right? Help me improve this thing. I've told you the theory. You have my paper, right? You have my Twitter. Go to my highlights tab. Read through my stuff. Help me improve this. Help me grow this into something even more applicable than what I've already built. And what I've already built, like, I'm really fucking proud of myself if I do say so. Like, I've actually made it to where you could trade with it. This is what I've showed you is a tradable top-down analysis approach. But I feel like there are more. There's more. For example, right? I haven't talked about exponential contraction. For all I know, this could be something as well. Right? This right here could be happening for a reason. I don't know what that reason is, right? But, like, these are all these questions that I still have. And figuring out what trajectory is happening on what time frame. That's something that I want to find out, right? But just finding ways to use this and ways to trade with this. Like, please backtest this and help. But yeah, I think that concludes this video finally. So, thank you for watching, and please reach out to me if you have any questions. And this is not public yet. I will be making it public in a few weeks, but keep this to yourself right now until I post about it on Twitter. But yeah, keep this private for right now. Just for a few weeks. But yeah, thank you.